At 32, Mark had no debt, a stable job, and a savings account most people would envy, until one decision erased it all. This is the story of Mark, a man who, by all accounts, was doing everything right, was thoughtful, responsible, and planned for his future with meticulous care. He wasn't a reckless gambler or a spendthrift. He was just like you or me, trying to build a secure life for himself and his family. But as he would soon discover, even the most carefully laid plans can unravel with a single choice, a single moment of misplaced confidence. This isn't just a story about numbers on a screen. It's a story about the real, human cost of a financial decision gone wrong. Mark was a software engineer, 32 years old, married to his college sweetheart, Sarah. They had a 4-year-old daughter, Emily. He earned a comfortable 6-figure salary, which allowed them to live a good life in a quiet suburban neighborhood. They weren't extravagant. Their life was defined by simple joys: weekend trips to the park, family dinners, and saving for Emily's future college fund. Mark was the financial rock of the family. He prided himself on his discipline. He had paid off his student loans years ahead of schedule, maxed out his 401k contributions every year, built up an emergency fund that could cover 6 months of expenses. He tracked every dollar using a budgeting app and had a diversified portfolio of low-cost index funds. To his friends and family, Mark was the model of financial prudence. He had a plan for everything. He believed that with enough research and caution, he could navigate any financial storm. He felt secure, in control. It all started on a Tuesday afternoon. Mark was scrolling through a financial news site during his lunch break, a daily habit. An article caught his eye about a new, disruptive tech company specializing in renewable energy storage. It wasn't a speculative startup. It was a firm with solid patents, a seasoned management team, and was already securing major contracts. The article painted a picture of a company on the verge of explosive growth. It was presented not as a gamble, but as a once-in-a-generation opportunity. Mark was intrigued, spent the next 2 weeks devouring everything he could find about the company. He read analyst reports, watched interviews with the CEO, and studied their financial statements. Everything pointed to a massive upside. The risk seemed minimal, almost negligible. He talked it over with Sarah. He explained that this wasn't like buying a lottery ticket. It was a strategic investment in the future, both for the planet and for their family's wealth. He proposed taking a significant portion of their long-term savings, $100,000, and investing it in this single company. It was money outside their emergency fund and retirement accounts, savings they had earmarked for a down payment on a bigger house in a few years. It felt like a smart, calculated move, a way to accelerate their goals, to get ahead faster than their slow and steady index funds would allow. After all, he did everything right, didn't he? So he made the trade. He clicked the button, and the money was invested. For a moment, he felt a surge of excitement. This was it. The first month was exhilarating. The stock soared. Our initial investment grew by 20%. Mark would check the stock price several times a day, a wide grin spreading across his face each time. He showed Sarah the numbers, feeling validated. See, he'd say, "I told you." They started browsing listings for their dream house, feeling it was now within their immediate grasp. Then the slide began. It started subtly, a small drop that analysts dismissed as normal market volatility, a minor correction. Mark wasn't worried. He'd seen this before. Time in the market, not timing the market, he reminded himself. But the drop didn't stop. A week later, a news report surfaced about a critical flaw in the company's battery technology. The company's stock plunged 30% in a single day. Panic started to creep in. Mark's inbox was flooded with alerts. He stared at the screen, his heart pounding. The number, once a vibrant green, was now a bleeding, angry red. He couldn't believe it. How could this happen? He'd done all the research. The reports were all positive. The company issued a press release, downplaying the issue as a minor setback that was already being addressed. Mark held on, telling himself to trust his initial research and not to panic sell. That was the classic mistake, right? Selling at the bottom? But the bad news kept coming. A major corporate partner pulled out of a deal. Then, a class action lawsuit was filed by early investors. Stock went into freefall. Each morning, Mark would wake up with a knot of dread in his stomach, afraid to check his portfolio. The $100,000 became 70, then 50, then 30. He watched in horror as years of disciplined saving, of skipped luxuries and careful planning, evaporated in a matter of weeks. The dream was turning into a nightmare. Stop showing Sarah the numbers. The joy and excitement were replaced by a heavy, suffocating silence. The financial loss was devastating, but the personal fallout was worse. The $100,000, an amount that had taken them nearly 5 years to save, was now worth less than $10,000. Their dream of a new house was gone, replaced by the stark reality of their depleted savings account. The stress was immense. Conversations between Mark and Sarah became strained. The unspoken tension filled every room. Sarah wasn't angry, but she was scared, and her fear manifested as a quiet distance that hurt Mark more than any argument could have. He was the one who was supposed to protect them, to provide security. Instead, he had gambled with their future and lost. He felt a profound sense of shame and failure. He couldn't focus at work. His performance suffered. The man who was once the pillar of financial stability now felt like a fraud. He had let his confidence morph into arrogance, believing he could outsmart the market. He had broken his own cardinal rule, diversification. He had put too many eggs in one basket, seduced by the promise of a quick and easy win. The canceled plans, the empty savings account, those were just symbols of a much deeper loss. A loss of trust, a loss of security, and a loss of self-respect. The most painful lesson for Mark wasn't about stocks or diversification. It was about humility. He learned that financial security isn't just about making smart moves. It's also about protecting yourself from your own blind spots. His research wasn't wrong, but his interpretation was clouded by optimism and the desire for a shortcut. He realized that the slow, steady path he had been on wasn't a weakness. It was a strength. It was a path designed to withstand shocks, to weather storms, and to protect against the single catastrophic error. The market is unpredictable, and no amount of research can eliminate risk entirely. One decision, even one that seems perfectly logical and well-researched at the time, can indeed change everything. Real money has real consequences. Mark and Sarah are rebuilding slowly. It will take years to recover what they lost, but they are recovering something more important: their partnership. Mark's story isn't meant to scare you away from investing. It's a reminder that the principles of sound financial management, diversification, patience, and humility are not just suggestions. They are your shield. If you found this story eye-opening, consider subscribing for more true money stories that go beyond the numbers. Thanks for watching.